You're listening to the Chorus One podcast, a show that covers decentralized networks and their impact on the evolution of automated and borderless economies. On this podcast, we invite pioneers and builders to discuss the decentralized protocols and projects they are working on. On the show today, we have Brent Xu, founder of Umee. Umee is a suite of cross-chain DeFi protocols that interconnect between Cosmos and Ethereum. Umee takes inspiration from Brent's experience in DeFi, proof of stake, and fixed income. Umee has three core products at launch, which are multichain staking, cross-chain DeFi rates, and interchain leverage. The podcast explores Brent's background in TradFi and some TradFi concepts, such as the term structure of interest rates, and covers how Umee is bringing a lot of TradFi concepts to DeFi, such as the term structure of interest rates and how it applies to staking. We discuss everything from why time values are important in crypto, Umee's two-token model for cross-chain lending and borrowing, how Umee builds yield curves for staking rates, plus so much more. Welcome everyone to the Chorus One podcast. Today you're with Xavier Megan, research analyst at Chorus One. We're lucky enough to be joined by Brent from Umee, which is a really cool network upcoming in the next few weeks. They're about to go live, very much in the DeFi realm, and Brent himself has a big background in traditional finance. So I'll hand over to you, Brent, maybe if you don't mind introducing yourself, please.
Absolutely. Thanks, Xavier. So really happy to be here. So I'm Brent. I'm the founder of Umee. Umee is a cross-chain DeFi protocol that interconnects between the Cosmos and the Ethereum blockchain. And we're building a suite of new DeFi tools that can interact with the overall Money Legos ecosystem. So we're really excited to be integrating with the broader DeFi ecosystem and building new ways of looking at different problems. Prior to Umee, I was the head of strategy at Tendermint. So, Tendermint, one of the creators of the Cosmos blockchain, I helped oversee development of several projects and protocols, and we created different opportunities for strategic investments in DeFi protocols and incubation and just providing grants to different groups in the ecosystem. Prior to the Cosmos ecosystem, I was an early employee at Consensus, the software studio. Basically joined when there's about 30 people and helped build the company from 30 people to 1,200 people in the early days, and just got to see a lot of the ups and downs of Ethereum just since the beginning. And we saw a lot of success with strong protocols like MetaMask, Infura, Truffle, and we also saw a lot of projects that didn't really work out. And I'd say that we had a lot of learning experiences in the early days. It was, very, very much full of lessons learned about, how to apply blockchain technology to different solutions. And prior to crypto, I traded bonds. So I specialized in mortgage-backed securities. These assets were very sensitive to interest rates, and they exhibited a phenomenon called negative convexity. I say that Umee is kind of a amalgamation of these three areas. So DeFi in the Ethereum ecosystem, proof of stake from a Cosmos-based network, as well as many concepts from the fixed income trading world that kind of wrap around to create interesting DeFi products.
And in this podcast, we'll definitely get into some of those more financial products that you mentioned. And I think it's really cool, your background in TradFi and also your experience in the crypto world, both at Tendermint and Ethereum, and now, creating Umee, sort of bridging all these three things together. So when we first chatted, which was a few weeks ago, when we first learned about Umee in terms of Felix and myself, we got taken through three main pillars of Umee. And also, just for our listeners, Umee have recently released their white paper, so it's definitely worth checking out if you haven't already by going on their Twitter or their website. So on the white paper and in general, you sort of mentioned three main pillars, which is sort of what Umee is in general. So you mentioned on a high level sort of what Umee is before and what you're doing, but then in terms of a slightly more lower level, like Umee, it's multi-chain staking, so to say. There's almost like cross-chain DeFi rates, and then also maybe a bit lower level is almost interchain leverage. So how, like you mentioned before, you're using the proof of stake ecosystem with DeFi, with TradFi. How do these all come together in Umee?
Certainly, yeah. Happy to dig into some of those key pillars. So, um, from a big picture perspective, Umi is aiming to be a cross-chain DeFi hub. We want to be a hub of activity. We want to promote new DeFi tools. We want to promote a nice foundation so that other DeFi tools can kind of build on top of our main primitives. So, as you mentioned, the three main pillars. There's multi-chain staking, cross-chain DeFi rates, and interchain leverage. And I can kind of dig a bit into the three. So multi-chain staking is the concept that coincides a bit on the liquid staking side. So essentially, we're allowing proof of stake assets on one blockchain to concurrently exist on other blockchains. The encapsulation of this in the initial formulation of Umee would be the Umee token. So essentially, allowing a proof of stake asset such as the Cosmos atom to concurrently exist on Ethereum as an ERC20 or ERC20 compatible token. So to kind of keep it simple, we're bringing proof of stake assets to Ethereum as ERC20s that can interact natively with Ethereum assets. And we are the ultimate goal really is to integrate with money Legos and take on a lot of those liquidity interactions within the broader DeFi ecosystem. From the cross-chain DeFi rates, this is an area that I kind of hold really closely to my heart. Because I come from the TradFi background, so everything in TradFi was about the time value of money and looking at interest rates and how they relate to the broader to our world. Interest rates always tell a story. If there's a war that's going on, if there's political uncertainty, if there's a giant recession that's happening in society, interest rates always react and they tell a story. I'd say that with cross-chain DeFi rates, we're trying to apply lots of interest rate concepts to DeFi, essentially trying to create a term structure of interest rates as they relate to the time value of a crypto asset. And we think that this is deeply important for the long-term sustainability of cryptocurrencies and how to bring a solid level of legitimacy to this space, because we'll be providing a real world framework on how society views time and value to an asset that is very new and sort of the ultimate encapsulation of value. I think crypto is in many ways just a deep definition of what value should be. And yeah, we can talk more about that in a bit. And the third area is interchain leverage, which is to kind of simplify it, leveraging assets on one blockchain to borrow on another. So the simplest way of looking at it is that you take an asset, leverage it on Cosmos, and then use that collateralized position to borrow an asset on Ethereum. And you can kind of imagine many permutations of how this could work.
Definitely. And before we sort of strip it back a little bit for the more non-financial people in terms of what the term structure means, I'm interested, so more from a user perspective in terms of what you just mentioned for the third pillar. So in terms of interchain leverage, so let's say on the Umee, the network itself, are you planning, is there a front end that you're also working on that has like connects to the MetaMask wallet and something like Kepler and Cosmos? Is that also what you're working on in tandem?
Oh, absolutely. We believe in a multi-chain world. So like John Adler says from the optimistic roll-up world, there's going to be multiple chains that interact with each other. So from a UI UX perspective, we certainly see a situation where, let's say, a user um, deposit some assets on Ethereum via MetaMask. The assets are deposited in Ethereum, and there's some sort of collateral token. So, nice shout out to Dan Elitzer for the ideas around collateral tokens. So you deposit Ethereum assets, get a collateral token, and that collateral token can be bridged to the Cosmos ecosystem and implemented in a Cosmos borrowing and lending space. And essentially, you can, for example, deposit Ethereum, bridge your collateral token to Cosmos, and use that collateral token to borrow assets in the Cosmos space and perhaps stake them and earn extra yield. So you're earning yield from depositing assets on Ethereum, and you're also earning yield from participating in proof of stake on Cosmos. We think that there can be a world of possibilities that can emerge from allowing this type of functionality, and it definitely starts with the front end. You'd first use MetaMask on Ethereum, and while you're interacting with the Cosmos assets, you have something like Kepler or other types of interchain wallets to be able to access these IBC assets.
Yeah, no, which I think for sure is very, very cool in general. And you mentioned a few times now, so probably a good time to ask. So in terms of Ethereum and Cosmos, you mentioned bridging an asset, for example, like maybe you've got a liquid staking asset on Cosmos that you would like to bring to Ethereum or vice versa. So what bridge are you using? And is it yourself? Is there some existing bridge that you're using? And why did you choose to use that bridge?
Certainly. So, if you've been in the Cosmos space long enough, you tend to hear this strong narrative of interoperability. So, I think the Cosmos ecosystem really emblemizes the ideas of interoperability based on a protocol like IBC, something that connects between fast boundary blockchains, and also just the heavy amount of development work we put onto Peggy, a two-way peg between Cosmos and Ethereum that has evolved into Gravity Bridge. So we've seen many iterations of this bridge. We've seen many teams work on it, and the recent team that's kind of you know um, uh, picking up a lot of the development of this is Althea. So I had a great opportunity to interact with Althea back at ETH Denver before the pandemic hit, and after talking to the team, I felt like, well, we got to introduce them to Billy Rennekamp and the broader Cosmos ecosystem. And those conversations sort of evolved, and eventually, Althea is building out the Gravity Bridge, and we're really excited about seeing the development that's happening there. And so, with Umee, with the Umee network, wanted to give a shout out to Alex Bezubchuk, Bez, who's working on the Gravity Bridge implementation right now. We're really excited about bridging assets back and forth between Cosmos and Ethereum because we think that this two-way peg of connecting between a probabilistic finality blockchain like Ethereum and a fast finality blockchain like Cosmos is going to open up a whole world of possibilities on how these assets can interact between each other.
Definitely, and I think we're sort of seeing these possibilities eventuate, with Umee itself. And so I want to go back a bit to what you mentioned in terms of the term structure of interest rates and how you're building a term structure of interest rates for DeFi. And so perhaps for the non-financial people listening to this, what is the term structure of interest rates in TradFi, and how could this be designed to be relevant in DeFi with Umee, obviously?
Of course. So I'd say the best way to explain term structure and yield curves is just the idea that a dollar today is worth more than a dollar a year from now. The reason for that difference and discrepancy of value is due to a time decay. So that year's worth of time indicates more risk and essentially a decay of value based on uncertainty. Time, in many ways, is representative of uncertainty. And if you extrapolate that same concept to cryptocurrencies, of course, an atom today is very much worth more than being able to access an atom later on in time. What gets deeply interesting is the fact that we work in an inflationary environment for proof of stake assets. Um, Time value has different types of transformations that can come from the fact that we have inflating assets. But to kind of boil it down into its fundamental components, I will say that the term structure of interest rates is essentially um, the the mathematical curve of what time value should be for different time periods or durations. So, what is the value of a dollar for 4 weeks versus 3 months, 6 months, 12 months, 2 years, 5 years, 10 years, and right now this term structure of interest rates is determined by a federal government, the Federal Reserve, which is very much a government controlled ecosystem. When we look at like something like a dollar right now, I think I have a dollar right here. It's in God, or $5, in God we trust. But the truth is that it's more of like a bank run system that's emblemaizing what the time value of the dollar should be pertaining to these time periods. Um, but we think that with crypto, with a decentralized blockchain ecosystem, um, that time value can be determined in more decentralized fashions. And so, to kind of answer the question about what we view as a time value, it's really a concept that was um, created by central banks to essentially bring a form of logic to the world. So logically speaking, in that $1 today versus $1 a year from now example, um, that kind of makes sense. And I think what society is trying to encapsulate with these mathematical formulas around interest rates is that they're trying to bring logical interpretations to how we should view the movement of time in a physical world. Didn't mean to get into kind of the
No,
philosophical.
that's
um,
that's very good. So no, definitely, I think it's hard. I suggest any of our listeners to actually Google or research the term structure. It's a concept that it's definitely worth knowing in the everyday world. And so I'm wondering, in general, with Umee, let's say with staking rates. So on different networks, we have different staking rewards and rates and inflation, etc., that are working with each other. Is there a way that one could use Umee to predict how a rate might change in the future or what it could be worth given some duration? Would that be possible in Umee?
oh, for sure. And that's where things get the most interesting because in the economics world, everything itself is kind of a rate. It's either a rate of change, a rate of volatility, or a rate of inflation. And so, as this crypto world evolves, um, we think that there will be more future-looking interpretations on where folks think rates will go, and there will be instruments used to essentially price that change and rate. And essentially, how this is done in the current financial markets is that there's a futures markets, there's a forwards market, and these are all used to determine the interpretation of value as time progresses. What is value going to be in the future? And so, um, creating a DeFi framework to essentially make predictions on where rates are going to be in terms of staking across proof of stake assets is going to be a really interesting tool. And so, a bit about my previous background. So one of the professors who got me interested in crypto, his name was Campbell Harvey, and he was famous for inverse yield curves. So yield curves are basically a mathematical interpretation of the term structure of interest rates. Uh, he made this discovery that inverse yield curves result in economic recessions. And he got a lot of praise for this research. He also ended up being a major libertarian, and so after he stopped teaching after the financial crisis, he got interested in academics again after discovering Bitcoin. So he found Bitcoin and he thought, well, this is kind of the answer to a lot of these a lot of the problems of the world. And fast forward a few years, being able to coincide DeFi with the broader crypto world kind of creates these new opportunities for rates to better determine, how they reflect just the construction of current societal norms as they relate to just the economics. So um, I think to answer the original question, there will definitely be a market for making economic determinations of these rate environments, and we'll see more. So in the real world, we call them yield curves. I think in the future, we'll likely see something like staking curves. So these staking curves will likely give an indication of how proof of stake assets should evolve in the broader economic world.
Definitely, and that's actually something that I'm really excited for. And yeah, thank you for that answer. I mean, I'm picturing something very cool that you'd be able to do in terms of this yield curve for staking rates. And I think out of anything we have in crypto, for sure, Umee is the best possible tool to be able to create something like that. Perhaps a little off topic here, but this is interesting because I have a financial background, and obviously we learn about the inverse yield curve. And you had a professor who created it. Is he still in crypto and or advising you with Umee in terms of your rates or anything like that?
Cam Harvey has been a tremendous force in the crypto ecosystem since the early days, and he was one of the folks who taught the original course on Bitcoin back when Bitcoin was first created. And just fun fact about myself. I graduated college the same year as Fred Ursham from the Coinbase ecosystem, and the way that we discovered Bitcoin was like, in the early days, he was giving out Bitcoins for free, and to his friends, and we were just like, "What is this stuff? What's going on here?" Fast forward a few years, we're going, "Wow, okay, yep." We saw some cool stuff happen over there. But yeah, there's a great crypto ecosystem at Duke University, and we are just kind of fortunate to be connected to a lot of smart folks who just saw a major future in this technology. So a lot of good stuff going over there.
For sure. I wish my lecturer taught me about Bitcoin when I was going through university. It's very cool. And so maybe taking it back to the protocol a little bit. So when I was reading the white paper, you have two tokens. So you have a U token, which is very much based on the Aave model, which you might be able to explain on a sort of high level. And then you have the Me token. And so the Me token, from what I gather, is using this liquid staking token as, like collateral, for example, like you sort of mentioned a bit earlier, to borrow. And so how do these tokens interact? What is a Me token and a U token first? And then how can I choose which one to use, I guess, in Umee to borrow, let's say?
For sure. And the I would say that Umi very much is about this connection, this universal connection between you and me, and in a phonetic sense. But regarding the you and me tokens, the U token, very similar to Aave Compound. I guess more similar to Aave because the token is experiencing inflation. As with Compound, the token value remains static, but the exchange rate is increasing. So with the U token, you're essentially representing the deposited collateral position that's earning interest based on you know. Borrowing and lending of that token that's deposited. I will say that Aave is one of my favorite protocols, and I'm deeply appreciative of a lot of the solid work that Stanny and the rest of the team has done for the crypto ecosystem. So it's great to kind of look at some of these models. The Me token is special. So the Me token actually represents a stake position. So initially, it will represent a staked atom, and an atom that is staked on a select group of validators. The validators that the atom will be staked on is going to be determined by governance, decentralized governance from the Umee token. And so we certainly hope that this Me token is designed in a way that really represents what a decentralized group would want a staked position to be. For example, it can be staked on several strong validators. Chorus One for sure, to be able to represent just the interpretation of the proof of stake yield that is happening in a Cosmos ecosystem. And so, um, we're heavily building out the Umee token, and this will concurrently exist on Ethereum as an ERC20. It will use an inflationary model, actually quite similar to the Aave token. Um, I think one interesting dynamic, in addition to the Umee token inflating based on proof of stake consensus, we're also aiming to implement some sort of slashing component to it as well. And so more to look out for in terms of this development. We're hoping to get a product that is as closely indicative of proof of stake and also the risks related to proof of stake as possible. And so yeah, be on the lookout. We're working hard on some of this stuff.
No, that's definitely very cool. And I mean, one question I might have with these validators that the stake is going to. So if I am someone that wants to use Umee, sorry, and I would like a liquid staking token in the form of a Umee token. So how is my stake spread across? Is it 5 validators? Is it 10? Do you have an idea there?
That's a good question. And I will say that it should be determined by governance. I think we are having governance plans in place to um, let the ecosystem decide, which validators this should be, the atom should be staked on. So, if initially the ecosystem, the token holders determine, well, let's be safe and use like Chorus One, Paradigm, and Coinbase or something, then that's kind of how the governance makes decisions about this. If in the future, as folks become more comfortable and they want to expand the validator set, I think that's what we want to see with governance. We want to see broader ecosystem participation. We're very grateful for the community. We think that the community should have a strong say in a lot of this stuff. So yeah, we're kind of building in that direction and just working towards figuring out ways of ensuring that folks out there are able to participate and just help with some of the governance side of things.
Yeah, no, for sure. And that was actually one of my questions that I think you've just answered quite well. In terms of the governance aspect in Umee, obviously as a sovereign chain, you get this real flexibility there. I actually did have a question that just I remembered. Going through your white paper earlier, I think one of the coolest use cases of Umee is using something like liquid staking Atom, for example, and then maybe minting DAI, and then the interest rate that you pay is basically from the basically the yield that you're getting from your collateral, essentially. So that might sound slightly complex to the listeners, especially if they haven't seen any diagrams. Do you maybe just like a bit of time sort of talking about how does that actually work? So how, as a user, I think that's quite exciting. The fact if I want to get some DAI on Ethereum because it doesn't quite exist yet in Cosmos, for example, how could I use my liquid staking Atom to mint DAI, let's say, on Ethereum, and then bridge it back to Umee in a way?
Yeah, this is a very interesting concept because right now I'd say that there are some stable coins in the Cosmos ecosystem, but not nearly as much in the Ethereum ecosystem. I'd say Ethereum has $100 billion of stable coins like Tether, USDC, DAI, and the new ones like Reflexor that's coming out, Liquidity, um, Fay protocol, and so we're seeing this sort of Cambrian explosion of stablecoins that are happening in Ethereum, and one initial use case for Umee's borrowing facility is so twofold. One is you're going to be able to leverage Cosmos IBC assets to borrow stablecoins. Essentially, you can take shout out to Osmosis. They did a great job with their launch. The stablecoins on Osmosis can be utilized on Umee uh, to be leveraged and used to borrow stablecoins from Ethereum. And once users have these stablecoins, they can either use them natively on Ethereum, or they can actually bridge them back into Cosmos and then use them to buy more Cosmos assets. And this would involve having the stable coins on an existing DEX and then just using them to perhaps buy more Cosmos IBC assets, and they can potentially repeat that process and have ways of using those Cosmos assets to borrow more stable coins and kind of strengthen their position. And so we see this functionality being one of the initial use cases that we want leading up towards our test net. The first thing is that we're kind of creating a market where folks who have stable coins can have allow them to be borrowed by folks who have Cosmos IBC based assets. And this will be extra interesting when we allow staked assets. So once we have a staked Cosmos Atom, this staked Cosmos Atom is both earning proof of stake yield, and it can also be used to borrow stablecoins on the Ethereum side. And what gets really interesting is that those two rates might cancel each other out. If the proof of stake yield is high enough, it would likely cancel out the interest rate that you're paying on the stablecoins that you borrow. And we also seek functionality where the initial rates, the initial staking rate, can also be liquidated to immediately pay off the interest owed on the stable coins in a hopefully very seamless manner. But this is definitely a more future looking functionality. My head of product is definitely working with me, and we're figuring out the prioritization of our scope. And this is all the direction that we wish to build towards, and we're just taking it step by step these days and figuring out a lot of challenges, a lot of problems. But we see these protocols having a lot of use cases, especially on the leveraging Cosmos assets for our stablecoin side. We think that there's going to be a lot of users and a lot of demand in that space.
No, it's very exciting. I think it opens up a whole new world for a lot of Cosmos users. Maybe just a quick question, just follow up to that. In terms of liquidity for something like borrowing DAI, let's say, is that something that is there liquidity providers that will be doing that on Umee, or will you be getting liquidity like via Ethereum itself?
Yeah, so I'd say that the Umee protocol is a very much involved in both networks. So we have solid Cosmos fundamentals. So we got solid folks from the Cosmos space working on our infrastructure using the Cosmos SDK and Tendermint and implement IBC. And we also have some solid Ethereum fundamentals as well. We envision a world where there's going to be a lot of Ethereum liquidity providers who would want to, deposit assets on the Umee platform, and there's going to be a lot of Cosmos users who are going to want to access some of that Ethereum liquidity via our Gravity bridge. And so we very much are in the bridge building mindset. We're kind of creating a nice interface where the massive amounts of liquidity that exist on Ethereum can interact with a lot of the strong technological innovation demand that's happening on Cosmos. There's so many IBC assets, and we want to give them an opportunity to access the broader money Legos on Ethereum, and we hope that Umee can be a nice bridge. With Umee, we're trying to be universal. We're trying to be a universal, cross-chain DeFi hub that connects between different networks. And we think that this initial implementation is just kind of just the beginning. We're also exploring just other layer 2 scaling solutions, sidechain architectures, alternative base layer protocols, and things in the rollups ecosystem. So yeah, we got a lot of strong plans, but initially, we're putting our main focus on just being able to achieve this uh, primary functionality, as we're figuring out how to expand.
No, it makes total sense, and I think might be a nice way to conclude. You've done a fantastic job. Thanks so much, Brent, for explaining today to our listeners what Umee is. Maybe just to finish off, it could be interesting just to hear about maybe your timelines. Are you on testnet or mainnet at the moment? How's the network been going in general? How do you see that playing out?
Of course. So, in terms of the testnet, we have a Wave Day coming August 20th. So, Umi means ocean, and so we want to, kind of be representative of sort of the oceans of liquidity that we're hoping to, have in this crypto ecosystem. And so, we plan to have a testnet on Wave Day, August 20th. We intend to have some initial functionality and just some interesting use cases related to the Cosmos SDK based Umee network, as well as what we're doing on the Ethereum side. We're anticipating a mainnet launch in end of Q4 2021. So we hope folks can keep a lookout and just kind of check out developments related to this project. And we're looking forward to having folks involved in helping us test out this platform and just giving insight and community feedback on how we can do better and in building this out.
Definitely always a positive way of going about it. And so, Brent, thank you so much for coming on the show today and for giving up your time. I'm sure you're very busy getting everything ready for testnet coming on now in just 15 days. Perhaps for our listeners, is there anywhere that they can find yourself or Umee on social media if they would like to learn more?
Absolutely. Please give us a follow on Twitter at Umee_crosschain. We also have our Discord available. A lot of great discussion going on there, and just would be great to chat, and you can find me on Twitter at bond_dog_51, and always happy to talk more about this protocol and just share more about what we're trying to do for the crypto ecosystem.
Great. Yeah. Thank you so much, Brent. And once again, thank you for your time today. Have a nice day.
Appreciate it, Xavier. Have a great one.